CMQ investors, welcome to the show. This is Chris Franco. Actually, let me switch my glasses. I need to get in my proper Alibaba mode. In this video, I will share with you the latest on Alibaba. I've got some new questions I'm going to be answering about that stock, as well as informing you on my latest position, opinion, etc. If you're unfamiliar, Alibaba is currently sitting at around $85.84 a share. I would expect more volatility to come. It's interesting. Barron says that it's at its lowest levels in 6 years, but actually in March, as we remember from a previous video, the price was down in the mid 70s. So I'm not sure why they're saying that, but the point is this has been a total dumpster fire if you're looking at it in the short term. Now, some people have given me a little bit of grief for selling or reducing my position, but I still hold a very significant position in this stock. You can learn more in my latest portfolio video, but I wanted to answer some questions that came my way about, am I planning to buy more at this price? Remember, this is not financial advice. I'm just sharing with you what I'm doing in my personal opinion. So at $85.84, let's call it $86, I'm not adding any more to this position, and I can explain why pretty simply, and then I'll tell you why I'm still in. Okay, so just because a stock is beaten down and I believe that in the long term it will go up, there is just too much uncertainty regarding China here. And, you know, when I look back, and I learned a really valuable lesson here, by the way, guys, so I hope you'll listen to this with an open mind. I have a large position in Alibaba, so I'm in it. But to keep loading up on it at this point, it just doesn't make a lot of sense, because if I really knew when the time to buy was, how do I say this? No one who's been loading up or buying the dip of Alibaba has expected it to dip that much further. Otherwise, you would time it, right? You would plan, okay, I'm only going to buy a little bit here, and then it's going to go down another 10%, and I'll load up more then. You know, this has been a stock where literally every point that I buy it, thinking it's a new low and that's, up is the only way it can go, it's continued to go down. And it reminds me of something I heard from one of my friends who works in traditional finance, and this is a while back. Remember, he said his boss said that sometimes when you buy the dip, you get sticky fingers. I think I know what that means, and I think it applies to Alibaba. Now, when I look at the latest news about Alibaba, and I'll share this with you right here from this Barron's article, it's not as if the fundamentals, meaning the actual business numbers, have changed. What's changed is, well, the expected length of the COVID-19 lockdown that's taking place in some of the largest cities in China, specifically Shanghai, but now there's concern that it might spread to Beijing. Let me read from this article for you. The worsening COVID-19 situation in China is weighing on the country's stock market, with companies including Alibaba and JD.com notching stark declines on Monday amid fears that lockdowns could spread to Beijing. Futures track. So shares in Alibaba fell 4% in U.S. market pre-trading. Shares in Alibaba fell 4% in U.S. pre-market trading, with JD.com stock down 3% lower than it did prior to the day starting off. Now let's compare that to the futures tracking of the S&P 500 index, as well as the Nasdaq Composite, which were both down less than 1%. Now in Asian trading, the Shanghai Composite plunged 5.1%, and Hong Kong's Hang Seng Index ended 3.7% lower. A little bit more details here, guys, about the COVID situation. A wave of COVID-19 infections has led to strict and extensive lockdowns in Shanghai, China's financial center, since March, with a resurgence in coronavirus across the country also limiting some industrial production. The highly contagious Omicron variant continues to spread, and fears are rising that the Chinese capital, Beijing, could be next to lock down. China continued to double down on its zero-tolerance COVID-19 policy, with authorities in Shanghai saying that stringent mobility restrictions would be extended. And this is according to the chief investment officer over at UBS. Beijing has ordered mass testing of residents in its largest district later this week, leading many to stockpile food as a precautionary measure. Now remember, this is, of course, I hope everyone in China and everywhere in China, Beijing, Shanghai, and elsewhere, get through this situation without any additional loss, pain, harm, etc. So thoughts to everyone in China dealing with the COVID situation. Now, with that being said, these are situations that do not affect the long-term earnings, but in the short term, we could expect earnings to be down a little bit further than what expectations initially were. And the article continues kind of alluding to that. This is from the same UBS analyst. China's response to Omicron presents headwinds to growth, and we now expect China's GDP growth to be 4.2% this year. Now, guys, as an investor, my perspective, my thesis on Alibaba, in part, and I'm simplifying it, but in part, I believe Alibaba is very tied to the overall growth of China. So if China grows and outgrows, Alibaba will be a good share to grow to capture the returns of that growth. That is just part of my thesis, kind of a high-level version of it. But the article continues. An accelerated economic slowdown in China from more COVID-19 lockdowns would pinch Alibaba stock because the e-commerce group is highly dependent on consumer spending, as well as discretionary spending from businesses on online advertising. Although some parts of China have been under restrictions longer than Shanghai, Omicron's arrival in Beijing would be an ominous development, said another analyst who was quoted for this story. That's just what's going on, guys. I'm not buying more, and it's not just because of this news. I'm not buying more because I've already bought enough. And at this point, I just want to sit with that position. And someone might say, well, why not? Warren Buffett says if stock, drops lower than where you bought it, you should buy more of it. I've made videos about that in the past. The mistake that I made, and again, this is important that I acknowledge this because a lot of people who have channels just continue, being bullish even though situations change. I'm trying to be, a really thoughtful investor, just like I've learned to be from Warren Buffett and Charlie Munger. And that involves rubbing my nose at my own mistakes and being willing to ditch my past cherished and beloved ideas. And so, yes, that is true. If a stock is continuing to go down below the price that you paid, yes, rationally speaking, it makes sense to buy more. But what I didn't factor in here is China. No disrespect to anybody who is from China or living in China, but the business environment in China is very different than in the United States. It's something that's still, I've gotten my head around it, but it's a lot of uncertainty. There's the VIE structure. There's the delisting threats, which I'm not that concerned about, but that's just another thing that could happen. And something that's really important to use as investors is just basic probability. So more things have to go perfectly right. So when I compare, a beaten down equity that I think has a bright future that's based in the United States versus one that's in China, like let's say Alibaba, there's just more that has to go right for the company that's based in China. And those factors, as I said, I've named a few of them, but there's many more. There's just more uncertainty. And I think we have to acknowledge what we don't know. That's critical as investors. It's critical in life. And it's something I'm truly trying to, apply in my own investing. It's served me well thus far. And I think it's helping me avoid taking even more of a bath on a company that, yes, long-term I feel good about, but there's just a lot to be worked out. And I'll feel better about adding to this position when some of those factors are worked out, which, they will be in due time. But let me know your thoughts. Are you still long Alibaba? Are you buying more? And really a great question is, at what point would you stop buying more? For those of you who are still buying. And this is just a community discussion. I'd just love to hear your thoughts. So for CMQ Investing, my name is Chris Franco. Thank you for watching this video, and make sure you check out the links that are in the description. There's a lot of great original content there that you can enjoy and hopefully use to your advantage as an investor. Remember, none of this is financial advice. I'm an investor like you. Hopefully we can continue to compound money together. So make sure to subscribe, hit the bell, and we'll talk soon. Thanks again.